All right, welcome back. Here we have a market review. This is going over the whole week and price action within that. As always, I'm a developing student. These are just my interpretations on price. Shout out ICT. So let's get straight into it. So if you can see overall, what is the current price order flow? What is the current order flow? Order flow is bullish. We're continuing making fair value gaps, and right now we just had a retracement lower, create a big nice fair order block candidate. We change state of delivery, and we respect that. We end up expanding to buy side liquidity here. So we have an IRL to ERL market maker model. This candle here kind of comes up to the constant curvature of that wick, and then we come back down to order block, and then we expand higher. So as you see, this is hourly chart just naked on Nasdaq, and then this is a 4-hour chart on ES. If you guys have seen my one video I was talking about this that there. I was assuming that this would likely be a candidate for a market maker model and a smart money reversal. As you see that happened, we ended up coming back down in this 4-hour order block, changing state of delivery here on this candle, tapping right back in that candle, and then we explode to buy side here, taking these relative equal highs here. And notice all these failure swings in the market. I would say this is more of time distortion. I mean, I'm not really gonna say that for sure, but yeah, this is kind of is just time distortion. Then we come back down order block, and we end up displacing the buy side there. As we see, I'm using this. I've been backtesting this, and this is kind of just salient liquidity points. So if we can use the 20, 40, 60 day if the data ranges for daily charts, we know that price should be fractal, and therefore we could use this for possibly future, possibly for lower time frames. And I've backtested this, and will continue to backtest this, and we can anchor this to Sunday midnight opening price, and that will bring us the most salient liquidity for the upcoming week. As we can see, we have this high and this high, and then this low right here, this 20-day low, 20 candle low, could be a possible candidate for a reversal here. As we see, we draw right back into that imbalance here that's created within the last 40 candles, and we take this 20 candle low and we just place up to buy side here, and that's what we referred to on Thursday or Wednesday, I believe. So here is an hourly chart, and as well as that, I've been backtesting new week opening gaps. So new week opening gaps and new day opening gaps. As we see, this blue box is that 4-hour imbalance. Look where we end up putting a low right here within that new day opening gap, gets respected. Right here, we kind of accumulate within that new day opening gap, and then look at that, and then look at that. Just look at the respect. This is something I've been backtesting, and kind of just things that I'm just going to bring attention to, and I'm just going to continue to backtest. So as you see, let's get straight into Monday, and here is Monday's delivery. And I'm doing that same principle, but I'm using the IPTA data range on Monday or Sunday midnight opening price. So as you see here, what's going to be the salient liquidity? So we have 60 candle lows here, and then we have we have the 20, 40, and 60 candle highs right here. As we see, that becomes a nice draw on liquidity here on the 1-hour chart. And as we see, we can also use the cast forward here. So we have 20, 40, and then 60 candles. And look at pretty much what ends up projecting a nice high right there. So as we see here, it's the same principle just on the 15-minute chart. As you see, we end up trading into a deep premium, into a nice 4-hour PD array, forming S&T at the time here. And these 4 swings right here is the graded price levels of the daily order block. So this is the 25%. This is mean threshold. This is 75%. As we see, we come right to that 25% level, and we also form S&T within the market, and we're also within that 4-hour PD, that 4-hour fair value gap. And then we change state of delivery, and then boom, we seek buy side. And where exactly do we end up putting the high day? Right at that 40 if the data range high right there, right at that 40 candle high right there. So as we can see here is the 5-minute, and this is using new day opening apps, and I've been backtesting this. I'm currently live right now. You can tune into my live streams. I'll be live every single day. But here we have new day opening gaps. As we see, we accumulate at market open or before market open, and then we end up manipulating before market open, taking buy side liquidity. Then we end up displacing below these new day opening gaps. These are both the blue line actually is a new week opening gap. It's that current new week opening gap, and then this white box is the new day opening gap. And then the green ones are previous new day opening gaps. And if you're curious, I'm referring to new day opening gaps within the past 60 days because if the data ranges, and I'm using new week opening gaps in the past previous 20 new day opening gaps. So as we come right here, we displace lower, imbalance right there, and look at exactly where we end up distributing at market open right there off that new day opening gap. Boom, and then we end up redistributing within that. And look at the low resistance liquidity. Where's the low resistance liquidity? Where's the high resistance liquidity at market open? We've generated low resistance liquidity right here. We end up displacing lower right within the new day opening gap. And we want to head to this liquidity here, also into that new day opening gap right here. Then we come into that higher time frame level. We form SMT, which we'll get into, and then we end up displacing higher off of that right there. Boom. And then right off there. And look at where we reaccumulate around. Like what are we constantly referring to? New day opening gap. Boom. Look. I mean, I've just been backtesting this, and it's been wonderful to see. I mean, it's not just a one-day thing. It's not me just trying to cherry pick it. It's generally been what I've been seeing within the market, and is something I'll just continue to backtest and build conviction with. So right here, we have that low resistance liquidity on the 1 minute chart. And then I'm delineating market open right here. Market open comes into this, looks like we have a little 1 minute imbalance here. But then we break lower, and then look at that right there. Boom. Then we break below. Then we end up redistributing within that imbalance, new day opening gap, and order block straight to. This pink line is a new day opening gap. They don't show up on the 1 minute chart for some reason, and we end up having 950 macro. The market puts in a fake bottom here and entices buyers. In 950 macro, we end up displacing higher, or we end up manipulating higher into this gap here, and then we break down once more to head into those higher time repeat rays. 950 to 1010 right there, and then we have the 1050 to 1110. So right now we have taken sell side here, so now we have a possible breaker for him here, but that doesn't seem like a very nice breaker to me. I like to see beefy candles if I'm going to use order blocks or breakers, and that doesn't suit anything here. So this is a 1 minute chart. So as you see here, we've taken sell side. We come back up to where maybe a level of significance, and we come back down to where maybe a level of significance as well into this balanced price range. We have fair value gaps in, fair value gaps out. This didn't normally. I would like to see this act as a significant price level, but we end up just referring back to this new day opening gap instead. That's going to be more powerful drawing liquidity, displacement, fair value gap, order block right there. Displacement higher, as we can see. Where do we reaccumulate within those new day opening gaps? And then this is kind of the rest of the day. There's not really much price action that I really liked here, and I'm just delineating 2 p.m. That's your silver bullet hour. Is there a silver bullet here? Maybe this one right here. Overall, not really favorable price action within here. I like to get most of my trading done within the AM session, so therefore we're just going to backtest the AM session when I do these. So therefore, we had price delivery here. We came back to the higher time PDA. We ended up changing state delivery on the 15 minute. Look at the respect to that order block. And then look at respect of this. This level is a constant encroachment of that fair value gap, that 4 hour fair value gap. And then look, we end up coming straight to buy side here. And we end up having a PM session, IRL to ERL possible trade setup. IRL internal range liquidity right here to external range liquidity. And here we go is those new day opening gaps on the 15 minute chart. And as we see, we end up forming that SMT within the market there between NASDAQ and ES. You can look at ES. I don't put up ES on my chart. I didn't put ES in this presentation, but there's SMT that forms there. All right, now let's get to Tuesday. Here we have Tuesday doing the same logic using the 15 minute at midnight open. As you see, we drop down into a discount. We take 20-day and 40-day lows. On ES, we actually end up taking the 60-day lows, so we end up forming SMT. 60 candle lows, because these are previous candles. So that's going to be 20 previous candles. There's going to be 40 previous candles, and there's going to be 60 previous candles. This is the data that IPTA is likely going to use as most significant. At least is what I found. At least is what I found in my own backtesting. I'm not saying that like any of these case studies, any of these reviews that I do, these are just my interpretations. These are how I view price. These are how I continue to grow and view price. So I would say, don't listen to what I say. See if it makes sense to you. See if it makes sense to you. So right here, we end up having a order block right here, and we have a propulsion block right there. And we end up expanding at market open. We end up expanding to buy side, taking these highs here. I'll pull up ES in a minute, but we end up just having a trend day here. Very nice trend day. And as we can see, ES is what I was showing. Look at these 60 and 40 day highs, relative equal highs. We barely purged buy side, so we're likely going to reprice back there after we form SMT and we take these 60 candle lows here. So right there, SMT with those 60 candle lows, change state delivery there on the 15 minute, and then we get a propulsion block confirmed. 9:30 opens here, and 9:30 we just expand, and we come back down within maybe a 10:50 macro, something like that, and we end up expanding to buy side here, retracing expansion, and that's what we end up doing. We end up taking buy side liquidity for this day here. So as we can see on NQ on the 1 hour chart, look at the respect to not just consequent encroachment of this 1 hour order block, but also the 25% level of that order block. Look how nice we put in a low right at there. And notice that we also are forming an SMT right there. SMT with perfect respect of that that order block with this SMT that already happened, that already occurred. So we not only do we have one big SMT within the market, we have two SMTs within the market. So therefore, this is a good candidate to see repricing higher to maybe those 40-day, 60-day highs, and maybe possibly this candle high here, maybe consequent encroachment, maybe this fair value gap right here, maybe any upside objectives that we're looking at. And here, look at I believe this is the 1 hour chart. Look at that low. Look at that low on S&P. Where do we put it at? Constant encroachment in that new day opening gap. Constant encroachment. And here, SMT, and I'm just showing it on NASDAQ. And here we have that 950 macro. And I also want to delineate, notice how we have a new day opening gap right here. We end up confirming the order block, 930. We see expansion right here at 930. We've already traded in that new day opening gap. We form an order block, 930 expands. Then we come back down. Fair value gap, new week opening gap right there, and then we expand to buy side 950 to 1010. We get retracement lower into a fair value gap into these three down close candles here, just to displace higher because ES wants to draw higher. So we expand right off that. ES expands right off that new day opening gap right there. Boom. Very nice to see. I'm going to continue to backtest this. This isn't just going to be like a one-time thing. I want to continue to backtest this and continue to see if it does repeat, because if it does repeat, then we can possibly use it for logic within our trades. As you hear, we have a new week opening gap. We come down, stop hunt, and we reprice higher. And we have an order block there. Here is the 15-minute chart. And yes, as we see, beautiful delivery, beautiful accumulation, reaccumulation up to buy side. And look at where we kind of closed the day, right at new day opening gap. I know it's nice to see. And here is the PM session on NASDAQ. And this also is nice to see. We have kind of accumulation. We have manipulation here. Then we use this stealing range here, this fulcrum point, as a possible projection. -1, that could be a trade in itself. Then we come back down, fair value gap right here, reprice higher to that -1 standard deviation. Then we break down. We kind of have a sell model. And then you can't really see it. Sorry, you can't really see it right here, but this low is right there at that new day opening gap. That low is right there. Beautiful delivery. Then we have 1210 finishes that macro, and then we end up seeking buy side. And here is the rest of the day on NASDAQ. As you see, end of day, same type of thing, into a new day opening gap. I'm sorry, it's kind of hard to see here. Into a new day opening gap, standard deviation, -1, boom. Wednesday, here we have Wednesday. Same thing, we're bullish order flow. Now we know it is most likely that we are going to expand to buy side. It is more likely that we are likely to expand to buy side. Notice what we've been. We've been in a buy model. What have we been doing? We've been accumulating. We have SMT at the lows. We have displacement higher. Look at where we're at. If we map this dealing range from high to low, we're within 75% of that dealing range. We're within that silver bullet. Look at how well that gets respected, and we end up just displacing the buy side here. So this is that silver bullet within the market maker model. Notice how we're not really interested in retracing back to this fair value gap. We're in a snappy delivery here. Notice how long this has taken. This has just been consolidation. It's been time distortion, I guess you could say. And then we end up just 1, 2, maybe three, maybe like 2 or 3 days. I believe it's like a day and 2 hours. I have a slideshow on it. But look, just 1 to 2 days, we end up taking buy side. And the same thing. I mean, I'm showing you guys like every single day, like we end up reaccumulating within these new day opening gaps. If there's not a PDRA that makes sense that we're reversing off of, it's likely a new day opening gap or new week opening gap. That is what I've been backtesting. The PDRAs that you don't see are the new day and new week opening gaps. Right here, we end up forming SMT, change state delivery right here, and then we have an imbalance right here. So this day actually was a half day, so I wasn't really trying to trade it or really backtest it too much. But just notice that this is a bank holiday. Then we have constant encroachment of this fair value gap. We have an order block. We have change state delivery confirmed off the 15-minute. After we end up expanding from that new day opening gap, and then we have a low resistance liquidity that rests within the market. Where's market open? 9:30. Where is the low resistance liquidity? It rests above here. Where are we likely going to draw to? Low resistance liquidity. As we see here, we have standard deviation that we can map out. As we can see, -2, -2.5 lines up with buy side. That could be a good draw on liquidity. That could be a good target. That's what we end up pricing to. We have standard deviation right there, like I was just saying, and then we have that fair value gap on the 5-minute. But as we see, we don't trade into that 5-minute fair value gap. We don't. But look at where we reaccumulate within new day opening gap, access support now, and we have low resistance liquidity signatures there. All right, now let's head to Thursday. Thursday actually was a bank holiday, so notice how Thursday we have a bank holiday. So what does price do? What does price do? We end up displacing and repricing quickly Monday, Tuesday, Wednesday. We end up repricing quickly Monday, Tuesday, Wednesday to buy side because there's a bank holiday on Thursday. We end up coming back down, taking sell side, and then kind of repricing higher. Here, there's nothing important that I really want to bring up. And now here is NFP Friday. NFP Friday, as we can see, we have, I'm just mapping out projections of this high to this low, this wick, this candle wick right here. Notice as well what we end up respecting. Constant encroachment of that wick, and then we have -2.5 there. Boom. Boom. -2.5 gets respected perfectly. As you see here, we have a change of state delivery right there. You can use the wick because it's in line with that fair value gap. Look at where we end up repricing to. Boom. And we see buy side. And we see buy side. This is the 5-minute chart. As you can see, you have the last two down close candles, which is that 15-minute order block as well. And then we end up coming right back within that. We have a big wick. We have big whipsaw at NFP, taking both buy side and sell side. Kind of look where we it's not like perfectly because we're kind of an all-time high, so therefore we aren't really gonna have new day opening gaps and new week opening gaps to respond to. But look at where we accumulate on that new day opening gap. I know I've been talking about it a lot, but I've been backtesting it, and I found that those levels are real fair value. They're levels of real fair value. Those are levels that are likely going to get repriced to when you least expect it, or like they're hidden. And I will continue to backtest this, and I will come to my own conclusions, and we'll see if it helps. As you see, we have 5-minute propulsion block now. They end up coming into, and then we seek buy side throughout the rest of the day. As you see, we have market open right here. We end up expanding. Look at this inversion fair value gap. Notice how the price delivery on NFP was a little bit tricky. We cock teased, as you could say. We ended up coming up. Teasing buy side, coming back down to that fair value gap, to that inversion fair value gap. Then we come back up to buy side, creating whipsaw, kind of sell side, buy side, sell side. Kind of just seek and destroy there a little bit on NFP within that 950 macro. As we see, these are all the macro times that I like to look at, except I didn't map out the 1150 because I didn't think it was really anything within there. Maybe if you look back on it, you might be able to find anything, but I didn't really see anything that I liked. We have institutional order flow entry drill here within that macro there. And then look at here, we have the 150 or 110 macro. Then we end up repricing right to standard deviation. 1250 macro, forming SMT there, displacement higher. As we see, I wanted to delineate this on ES. As we see within that NFP candle, look at this NFP wick. We go from extreme premium to extreme, or first we go to extreme discount to equilibrium to extreme discount to extreme premium. And then we go to extreme discount to equilibrium to extreme premium back to almost discount up to buy side. Look at this price delivery on ES. I mean, it's not the most favorable, I would say, personally. I wouldn't really look to trade this. And as you can see, NFP Friday and near all-time highs. There could be something here, but I would say that there are going to be better days ahead of you. There are going to be better price action days ahead of you, and this is just a case study. This isn't me trying to say, oh, look at this strategy. This is just a case study. These are all I'm going to post, just case studies. And as you can see, this is the market maker buy model that we end up happening. Notice these lines right here, they represent midnight opening. Notice every single day we accumulate within accumulate below midnight opening. We accumulate below midnight opening. We accumulate below. This is just beautiful price action, beautiful buy days, beautiful buy model within this. Like beautiful, beautiful. And look at that. We form SMT at pretty much every single day. SMT at every single day below midnight opening into higher time PJs. It's beautiful. Beautiful delivery up to buy side. And yeah, I think that's all I have for this presentation for this week. It was a little bit different week because we had NFP and we also had a bank holiday on Thursday. It was 4th of July. Anyways, hopefully you guys appreciated this video. I mean, they're kind of just case studies for me to showcase. And yeah, I will see you guys in the next one. Have a good one.